A very warm welcome to the programme. Well, sales at the drinks giant Diageo are down. The company in the industry is saying sales in the last quarter fell by 0.7%. Diageo, the maker of many well-known brands, including the likes of Smirnoff vodka, Guinness beer and Johnnie Walker Scotch, has saw demand in the West squeezed and so has been shifting attention to China, Asia and emerging markets for future growth. But that's not without its challenges. The industry is bracing itself for sales of beer in Indonesia to go flat when the government clamps down come into force today. That could affect half the country's beer sales. China's anti-corruption drive has certainly hit sales of expensive cognac and whiskey. And advertising restrictions in Southeast Asia have also hampered the ability of global firms to take on local rivals. Well, Diageo's chief executive, Ivan Menezes, told us why Asia has become such an important market.
The fundamentals of this region are very strong for us. I see Asia getting to 25% of the company. We've got very good growth prospects in India, in China, and Southeast Asia. There will be nearly 60 million people every year turning legal drinking age in this part of the world. 50% of the growth of our categories is going to happen in Asia around the world.
It's the boss of Diageo there speaking to Ali Moore in Singapore. As you can see, Saab Chahal is with us. He's Senior Equity Advisor at Fat Profits. Welcome to Business Live. What's interesting there, you're hearing from the Chief Executive of Diageo, and they talk about Asia being this big untapped market, these emerging markets they want to move into. And some of the figures are staggering. 60 million people in the region turn legal drinking age there every year. It is a huge market and one that clearly they want to be part of.
Certainly, it is a massive market. I think we've mentioned Indonesia there as obviously being a key part of the Southeast Asian drive. But what we've got to remember as well is the actual makeup of the country. It's a Muslim country in the main, which is, we've had religious groups coming out, and that's part of why the ban is coming into place right now. So just because the market is there doesn't necessarily mean that they're actually going to be able to tap that market.
It does so underline, doesn't it, that these companies, Diageo, SAB Miller, who are all coming out with trading statements at the moment, they need to be very, very diversified, don't they? I mean, Diageo's stock down now around about 2.6% off the back of today's news.
Well, yeah, I think that if you look at the US, that has been their traditionally strong market. They perhaps haven't quite returned the gains that they were expecting to see from the US. And one of the key things, and Ivan Menezes mentioned it in the statement today, that we haven't quite seen the trickle down from lower gas prices, the overall macro view in the States getting better. I think we may well see 6 months down the line that would actually filter through, and you'd expect, rather than people who have perhaps been buying drinks at the bottom end of the range, now making their way up the scale.
This is a market too dominated by lots of takeover talk, and we've seen a spree of mergers and acquisitions just these last couple of weeks, actually. Is there any indication that that is the only way that they will manage to beat their rivals, is to get bigger, to buy up locals? And we've talked about the difficulty of competing with local firms that have, frankly, an advantage at home.
Well, I think that's a great point, and I think that's really why we've seen a lot of interest in Diageo from 3G, which is a Brazilian company. That's also got a stake in AB InBev, which actually is the world's largest brewer out there. So, yeah, we've got Diageo in the mix. We've also got SAB Miller, who actually were looking to get involved with Heineken. That was ultimately taken, it was turned down. But then there's also interest from AB InBev there as well. So it's a very interesting time for the drinks companies.
Saab, thanks very much. Saab Chahal there, Senior Equity Advisor at Fat Profits. Thanks very much.
See you again.